The what me worry market? Well, it starts to teeter. Let's take a look at our 60-minute chart of the S&P 500 and see what happened during this week. The gray area being the overnight trading in the S&P 500, and the white area being the trading during the trading session, the regular pit session, as dinosaurs like I would call it. So here on Monday, you saw not a lot went on. It was kind of choppy. Eurozone was lower as their business survey showed slowing. So oil gained on report that Saudi was cutting their exports by a million barrels a day. That was a huge cut, and that really started oil moving on the upside. Google had on Tuesday, they came out, and that was actually Monday night, that they said that they were soft on their ad clicks, and that weighed on the NASDAQ. The market tried to get a move on the upside in here, but you could see overall it was choppy, and late in the day did sell off. Bonds were down big on tightening fears, but the Fed didn't really prove that on Wednesday. On Thursday, you can see the markets tried to rally again overnight. These are usually just on earnings pushing things up overnight. The Fed came out as expected with no change. You got the no change. Overall, super dovish. They say balance sheet to start to be reduced relatively soon. This is all that ridiculous verbiage that you get out of them that's meaningless. Somebody said to me, posted something about the Fed and who the new appointment would be for the Fed chair, and my response is, how about nobody? How about just getting rid of the Fed chair and rid of the Fed, and let's get real market discovery? Yeah, there I go ranting again about it. Boeing comes out with great earnings, and it soars, and that lifts the Dow, but overall you could see where that FOMC news came out, the market just didn't do all that well. The Dow did much better. So U.S. stocks up early and mixed, even with the NASDAQ being strong. Now, the big move of the week was on Thursday. Facebook came out with a beat, right? And they lifted stocks early on, so you can see that they were strong overnight. But then the techs really started to get slammed. And you can see here in the S&P 500 that it moved down from 2479 to 2457. So there was a very fast 22-point drop in the ES. And that is the biggest that we've seen in a long period of time. And this could be the start of something. That really is what it feels like, as we got early and then this big crack, and then everybody covers their shorts on that big rebound right over there. On Friday, you got some firmer, some lower markets in the world markets. The U.S. market tried to hold early on, but it really couldn't, and overnight some selling came in. And you can see here, as we get with about 2 hours left to go in the day, that the market is just kind of chopping around in here. Amazon disappointed. Starbucks got cratered on their earnings on Amazon. We'll talk about that in a couple of minutes, as Amazon finds out that in order to destroy the rest of the retail world, they have to spend some real money. Let's take a look here as we look at our calendar for the coming week, and you can see that right in here. As far as earnings go, we're still right deep in the earnings season, and you can see that we have some important earnings coming out. There's Apple after the close on Tuesday. There is Tesla after the close on Wednesday. Though Tesla is in my opinion in a very bad pattern. And now as we get into where they're actually starting to deliver the their new Model 3s, it's going to take a long time. I mean, some months before they really get their production up. I think they're actually going to only deliver a few cars in the next couple of months, relatively few, and then towards the end of the year, they are supposed to get their production up to some 20,000 a month. So we'll see, and we'll see how many people cancel out of 500,000 pre-orders for those. So we know there's going to be some cancellations on those. Average car is going to be 45, 50 grand, not the bogus 35 number they're talking about. So there I go off on Tesla, which I really think is in a bad cyclical pattern in there. You could see that the news coming out for the week, the big news is the ADP employment. That's the private employment on Wednesday. And then the regular employment numbers come out there on Friday. ADP is tended not to be a market mover, but the regular employment numbers could actually be a market mover. All right, short-term view for the coming week. Remember that we're in our two-year anniversary period here, and I've got special links for half price for level 2, 3, and 4. If you want to have our charts, or you want to have all our rankings and setups, or just the videos, write me slim at askSlim.com. Tell me what level you want to be. Go to the askSlim website, and you can look at all our levels, and then I'll be glad to send you that link. What we're going to look at here is the S&P 500 for the short-term period. So when we say that, we're looking at the S&P 500 on the daily chart. Now, when we do this for members, we look at 5 different groups of indexes, and the bond market, the gold market, the oil market, so metals market. So we look at lots of things in a short-term view, but this is only looking at stocks. But I am going to share something with you that is a proprietary indicator that I think will be interesting to you. So let's take a look first at this S&P 500. Now, what I said last week was that I thought that there'd be a little dip early. They'd try to rally again, and then late in the week or the beginning of next, they would start to move down again. So it actually followed that pretty closely. The dip wasn't as deep as I expected in here. So this is the notes that I had on my paper here, and it actually followed that pattern really closely. What am I looking at in here is the cyclical rhythms. The smaller ones right in here are about 9 or 10 days. These are about 18 to 20 days. And you could see that one was 18 there. This one is really short at 16. And where we are right now is this is about a 15th day. So what are we looking for this week? Well, we believe that we are in the double sell-off area. You could see it's drawn right in here. That is a period of extreme risk when the intermediate patterns are due to decline, and we have that also. So I call that a period of extreme risk. I expect this week to be down, right? But we still have doubters and rebounders and positive momentum, and it's pretty hard to get a big decline for where we are right now. So we think it's down for the week. You get some bounce the following week, so I'm following this right in here, and then a big acceleration to the downside. Remember, we said August, early September was the period for that. So we have a period of extreme risk, a little bouncing period there, and another period of extreme risk coming right there. That is kind of an extended short-term view when you look at that. So I'm going to move in a chart in here for you to see, which is the askSlim market condition indicator. This is a proprietary chart that looks at the internals of the market in multiple time frames, really, and it's a very unique type of a indicator, and we built it to essentially be reflective of looking at weeklies, dailies, and intraday patterns, and gives us a sense for the internals, what's the strength of the market internally. You could see in here, when you look at that we have all 4 major indexes, and you can see that when it's above this middle area, the swing zone, it's positive, and this has been in this 90 area now here for the last couple of weeks. Same thing for the Russell over here, the same thing for the NASDAQ, and the same thing for the Dow. You can see that. These are, even though you're getting breaks here, you could see the Russell starting to really weaken. Here's that NASDAQ. You have to get through this swing zone over here to be negative. So I wanted to show you this indicator, our proprietary indicator, so you could see that while we're looking for the market to move to the downside, while we're looking for significant corrections in here, the market internals have not started to break down yet. It's because the longer term internals are so strong that as this starts to roll over, they're not affected yet. So this is a weighted type indicator. People that are our level 4 subscribers, 3-month subscribers, get this indicator for their TOS platform, and it works on everything, and it's just a phenomenal indicator for looking at market internals. So I wanted you to see that. So our projection for the week, again, is that it's likely to be a down week. We're looking for it to decline into this support zone right over here, getting down to somewhere between 2460, 2453. If there's risk in here, the risk is to the downside. In other words, it could be worse than we have a drawn in here because we're getting to this area of extreme risk. So we're looking for a down week in the market this coming week. And as we say, the risks are building, or you could say the risks are to the downside. I hope you enjoyed that video. Be sure to subscribe to our YouTube channel, and also go to askSlim.com and become a level 1 member. No cost to you, and we have some special videos for you to see. I know you'll enjoy them. I've been